Good evening and welcome to tonight's live webinar for member-only content where we look at the ASX investment opportunities in review for the 30th of November. Any individual reading or listening should discuss with their financial planner or advisor the merits of any recommendation or offer presented in this material for their own specific circumstances and realise that not all investments are appropriate for every individual. Investor Signals provides a broking account service which includes our model portfolio, ASX Top 20, 50 and 100, as well as access to our US S&P 100, our ASX and US high conviction models, as well as an independent portfolio with access to derivatives where we can use covered call options to enhance portfolio returns. If you'd like to know more about the broking account service, please contact me on 1300 614 002. The technology we're using tonight is the Investor Signals member area. You can subscribe to it for $1,320 for the year. And if you'd like assistance with working your way through navigating the features of the member area, again, don't hesitate to give me a call in the office. The chart up on screen is the Nasdaq, and just it's an important part of the backdrop that we need to analyse and remain mindful of, which is the high PE valuations within the technology sector in the US. So we continue to watch reference point in the Nasdaq, which we'll look at a little bit closer shortly. As long as the market stays above that, that's fine. If we see a reversal lower, we just need to be a little bit cautious. This is the valuation table that we've looked at previously. We continue to monitor the rate of the Q3 earnings and whether we get the uptick in Q4 that the market's expecting, and where that ultimately means fair valuation is, even in a low interest rate environment, that we need to see S&P 500 earnings sitting up at around this $160 level, not retracing back to that sort of 140, and we'll continue to monitor that in future week recordings. Up on screen there's the graph of the Nasdaq. So as I mentioned, we've shuffled the support line up to below the prior session low. If we see the Nasdaq really move back down below 12,100 points, we start to get a little bit cautious. We're mindful that the stochastic's up in overbought range, but at the moment the fast line's above the slow, so we'll just continue to monitor that. And if we see that turn lower and a break below that support line, I'll draw your attention to that on the daily blog. The other major indices that we look as a reference point is the S&P 500. It's been under algorithm buy signals since 3,200 points. It's now pushing up to 36. But again, if we were to see that close below that 10-day average, if we were to see that stochastic rollover, we might start to take a little bit more of a cautious outlook towards the US market. Domestically, the XJO, we're seeing a slightly different picture. We're getting further deterioration here, mainly as a result of the trade pressures developing in China. So we're seeing the XJO below the 10-day average. We're seeing the stochastic rollover, and as we roll through the top 100 stocks tonight, we'll have a look at what that means for the companies that we want to be focusing on. So if you're joining us for the first time, our process here is we toggle through the ASX 100 one week, and then the following week we look at specific lists. So tonight the focus is going to be the ASX 100. So we come into the watch list button, select ASX 100 from the drop down, we get the percentage gains to the top, we organise it in buy signals at the top. So in order of following this evening, we're going to be looking at the best performing stocks today that are under buy signals. We're going to get a certain way through the list and you're going to see the primary signals switch from buy to sell, and I'll just highlight or draw your attention to when that shift occurs. So the first stock that's under buy conditions that we've been active in is TPG. We're originally buyers of this off $7. It rallied up to $8. We've taken profit, but again it's back on the radar on a pullback to around this 750 level. Keep an eye on the stochastic. If you start to see that turn back higher, there's an opportunity to buy back into TPG, and we're attracted to that because of the synergy cost benefits coming through from the Vodafone acquisition. Fisher Paykel, if you've been reading the daily blog, this is a stock that I've referenced a number of times as a buying opportunity off this $30 support level. Has now rallied around 10%. Full value's back up at around $34, $35, so you can either just simply take profit or sell covered calls, but we continue to like that as an opportunity in the market. REA Group switched from sell conditions to buy there at a 106, now pushing 145, but it is getting expensive. Appen Group within the technology space, this is a new algorithm buy signal. The stochastic hasn't yet crossed higher. It is, like many technology stocks, trading on a very stretched PE valuation, and it is susceptible to that weakness should it develop in that broader Nasdaq 100 index, which is why we continue to reference that break of support in that index. But for the time being, APX mindful of support there at around $30, 80 or $31. Keep an eye on the stochastic there. Keep the position size small if you're trading that. Likewise with Altium, high quality tech company, but it is trading on expensive PE at around $34, $35. The setup looks reasonable there. You've got the algorithm buy signal, the positive interim pivot point, and the stochastic starting to turn higher, but for traders you want to run a stop loss below that recent support line. ResMed, terrific business, growing both revenue and profit higher than what analysts had forecast, and this is something to think about as a buy on the dip on opportunity. Support there at 27, stochastic moving higher. From a pure valuation standpoint, would like to be buyers of it back at around 26. Whether we see that level of pullback, we'll have to wait and see. Computershare's been benefiting from the takeover acquisition of Link and improved sentiment towards the sector. We still have deteriorating earnings trends, but as I mentioned, given that their main competitors subject to takeover, we've seen increased buying interest. So I've shuffled the support line up there to 1330, but is under sort of resistance where it is at the moment, but maybe back at around 1330 we'll take a closer look at that, and I'll draw your attention to it on the blog. Afterpay, you want to avoid that for the moment, too expensive. Cleanaway, this is a defensive dividend consideration for portfolio. You're getting just above a 2% dividend yield. Company's growing earnings somewhere between 2 to 5%. Has a good runway over the next 2 to 3 years where we're expecting to see solid earnings growth, even if we have a slow economic growth environment. So keep Cleanaway on your watch list. A pullback to around 230 is a suitable entry level there. Sydney Airports, the rally's done there, so I don't see there's an opportunity. ASX, add this to your watch list. It's corrected from $91 down to 77. Keep an eye on the stochastic. This is a trade where you want to scale into it in at least 2 position sizes, so take some exposure now and then add to it at lower levels. High quality business will find support. AusNet not doing it there at the moment. NextDC not doing it there, but it is under buy signals. Beach Energy, we're still bullish on the energy spectrum in general heading into 21, but Beach has rallied from 120 now up to $2, pulled back a little. We're seeing that across whether it be Origin, Woodside, all those energy stocks that we've been long. For the most part, the gains are already absorbed at the moment. Just be a little bit patient, maybe wait for a further pullback and then reset long exposure again. Ansell we like, so the level here is to try to pick it up between sort of this $35 and $37 level, but we like the fundamentals there. Coles back down at around $17.50. You want to think about adding that to your portfolio. A2 Milk, slightly higher risk proposition here, but it has corrected from $20 down to $13. Obviously issues there with supply or distribution opportunities into China being impacted, but at around $13 there's a lot of bad news priced into it, and we do expect even just flat earnings growth in the current environment, and there may be a re-acceleration into late 21 which should support higher prices. The gold trade's been we've seen gold really correct from 1950 down to just below 1800 an ounce. We've seen the Aussie dollar rally up to 74 cents, which is weighing on earnings for the domestic gold stocks. But if we were to take a 3-month view, we're getting pretty close to where I think support is in gold prices, and you just want to be patiently accumulating them. Not doing anything in JB Hi-Fi. Domino Pizzas are now under algorithm buy signals. The original signal there was around 72. I've created a wide band there from 65 to sort of 72 as a range. Keep an eye on the stochastic for a move higher, and it might be one to think about on a short-term trading opportunity, and I'll continue to reference that on the blog. Wesfarmers we like as a high quality business, good exposure to e-commerce. We're buyers of it at 45. In some cases we've taken profit where it is at the moment or sold covered calls. If you want to be a little bit patient given some of the weakness that we're seeing pre-market in the US futures at the moment, if we were to see a couple of days of selling in the US market and a pullback in Wesfarmers, you might be able to take a look at that at slightly lower levels. Sonic Healthcare, buy this on the dip. Correction back down to $31 would be the buying opportunity there. Ramsey, buy this on a correction back down to 61. Transurban's corrected from say $16 or $15.70 back down to $14. I've shown the support range there from 13 to 14 is the buy opportunity. Watch the stochastic, the black's the fast line. You're looking for that to turn back up through the red as your entry level, and I'll reference that on the blog as we see that crossover occur. This is the instead of the XJO being the top 200, the XTO is the top 100, but you're seeing the same pattern there where we're under an interim negative sell signal. You're seeing the stochastic roll over, and we had a heavy close today below the moving average, and as I mentioned, the US futures are weak pre-market this evening. Fortescue Metals, we continue to broadly like the iron ore plays, although obviously the increased trade tensions with China are starting to weigh on sentiment here. But still, Fortescue, Rio, BHP need to be ones that we look at on the dip. Northern Star, you got the added benefit here of Northern Star merging with Saracen, so you're getting some added uplift from the cost synergies from that merger, which will take place next year. So if you're looking for exposure within the gold space, obviously Newcrest is a standout, but you may also be thinking Northern Star and Saracen for those cost synergy benefits. So Saracen around that sort of 425 to 450 level. Spark Infrastructure not doing there. APA Group back at $10 is a buy. Evolution Mining, take a look at that if you see it break below 475. QBE Insurance we're avoiding. Globally, the insurers all still, you're seeing the US insurers issue bonds to raise money to shore up their balance sheet, and I think that sort of speaks to some of the concerns that global insurers have at the moment. Aristocrat, we were buyers of this at lower levels. It rallied up to $35. Just keep an eye on the stochastics moving lower, and you really want to see that back at $30 if you're looking for a shorter term trade there. Cube ran into resistance at around that $3 level, which was our target. Again, if we're seeing a little bit of weakness in the US market, you'd be looking to pick Cube up closer towards that 250 level. Now we've switched into stocks that are under sell signals, so we're not doing anything in WiseTech, we're not doing anything in Charter Hall. James Hardie up against resistance near that $40. Macquarie, generally speaking, we think the banks are now up against resistance and they find it a little tougher going. Goodman Group, high PE stock trading on less than a 2% dividend yield. Yes, it's good, delivering good earnings growth up at around 9 to 10%, but what we're looking for here is a correction lower and a switch from algorithm sell signals into algorithm buy signals, and I'll draw your attention to when that happens on the blog, and that'll be added into the portfolio. We've been patient here on car sales. We have made good money out of this over the last year or two. The rally up to around 23 looks a bit expensive to me. We're looking for a correction lower and a pending algorithm buy signal and the stochastic to turn higher. So again, I'll draw your attention to that switch on the blog. Ampol, we're buyers of this at around 25, back up at 30 is fair value. That was part of sort of a recovery trade that we'd spoken about. Oz Minerals, creating a new high at the moment. Be patient. We're looking for a more significant correction lower and a shift to algorithm buy signals, and then you'd want to add that into your portfolios. Coca-Cola, there's speculation that there may be a higher bid there. Seek not doing there at the moment. Actually, just to jump back to Seek and have a closer look at this, up against resistance near $26 again, looking for a deeper correction lower and a shift from sell signal into buy signals before we look to add that into portfolios. Origin's been a counter trend trade, so I'd spoken in earlier recordings over the past few weeks. We'd identified 4 or 5 counter trend names that we thought that were oversold and ready for a bounce. The stocks rallied around 20%. Back up against resistance, but I still like Origin on a 2 to 3 year outlook. Oil Search not doing there at the moment. Lendlease, we like the long-term fundamentals, and we're sticking with this despite it being under algorithm sell signals. Obviously, tough trading conditions for Lendlease, but you are seeing them dispose of like engineering, mining engineering or mining services assets. They're continuing to acquire high quality land assets in the US. They're continuing to push forward with a $21 billion property development project with Google. They're acquiring property sites in Brooklyn. So they're still active and expanding their balance sheet or expanding their land bank future portfolio. So we're still encouraged by some of the strategic developments there in Lendlease. GPT not doing there at the moment. Cautious. Nine Entertainment cautious there. Reliance Worldwide cautious. Dexus up against resistance, not doing there. Challenger up against resistance. Worley Parsons, this surprised a little bit the strength here, but it is under sell signals, so not doing there. NIB Holdings, not doing there at the moment. Rio we've stuck with, so BHP, Rio, Fortescue, we've been patient and stuck with those names, and we continue to see an iron ore being reasonably well supported. Cochlear up against resistance. Our preference really within the healthcare space still remains Fisher Paykel, Sonic Healthcare as our preferred name. So Cochlear under sell conditions. Suncorp still cautious on local banks and insurers. So our preference within that banking plays being that BNKS. So just as a reminder, the code for that is BNKS. It's the Global Banks ETF. Xero, we really like this. This is a terrific business that's a SaaS or subscription-based model that's continuing to drive earnings growth, but it is expensive and you want to wait for a pullback. So over the coming months, when we see a correction lower and a shift back to algorithm buy signals, I'll draw your attention to that on the blog. Mirvac avoiding that at the moment. AZJ really just yield support. There's nothing there in the way of attractive earnings growth, so we're looking for consolidation around that 420, 450 level at the max. BlueScope still running in a resistance up at around $18. Vicinity not doing there at the moment, nor in Atlas. Brambles we like, so this is a stock that we picked up at lower levels. It has switched to algorithm sell signals at $11. Rather than selling this stock, you can certainly just think about selling covered calls, turning that 2 and a bit % dividend yield into around 8% yield with the covered call. So if you'd like to know more about that, please call me in the office and I'm happy to run through that derivative strategy that we're utilizing there. Telstra, we've seen the sell signals originally up here at around 350, again at around 325. This was one of those counter trend trades, a little like Origin. We've seen a rally in excess of 20%. We've taken profit on that, but we do like the separation story there with Telstra, whether they spin off Infrastructure Co, and I'd be very surprised to see a retest of those lows there in Telstra, especially given that the company's already reaffirmed that they're going to be able to keep the current dividend policy in place. Medibank Private, cautious on that, up at around $3. Santos, not doing there at present. Westpac, all the Aussie banks, preference BNKS over the Aussie banks. Keep an eye on the XJO. We've seen it break below that 10-day average. If we see the Nasdaq also break below that support, you could start to think about at least taking profit on the Aussie banks or even starting to lean on the short side of them. Iluka not doing there at the moment. Stockland's up against resistance. We see that struggling to do too much more above that 450 level. Keep an eye on Woolworths. I think there's a buying opportunity soon approaching here. We've seen Woolworths correct from $40 down to 36. The lower support level there's around 35. I'll draw your attention to that on the blog. If we have a closer look at the stochastic, it's still heading into oversold territory, but you'd start to expect this to turn higher, and you may want to think about buying Woolworths or at least running a buy right strategy. Woodside Petroleum, this was a counter trend trade as part of that bullish energy basket, which for us included Origin, Woodside, the triple O ETF, which is just the straight oil ETF, Beach. But we've seen Woodside rally from $18 back up to around 22. We may see a little pause and a slight pullback, but generally we see oil moving higher into 21. AGL again counter trend trade, but we've seen that come in under algorithm sell signals there at 14.50. That was a reasonable bounce that we saw there from 13 up to $14.50. Amcor, so it's again worth pausing and adding this one to your notes. Amcor, very high quality company, growing earnings between 5 to 8%. Resistance up there at around $16. We'd expect to see this switch to algorithm buy conditions, even if we don't see the presentation of that buy or the algorithm buy signal. Keep an eye on the stochastic to actually bottom out here and start turning higher. We think Amcor is a high quality business that you want to buy on the dip. BHP, comfortable with that at the moment. We'll continue to review that on the blog. AMP not doing there at the moment. Boral up against resistance at around $5. National Bank, so again preference has been BNKS, which is the global banks ETF with the main exposure being JP Morgan. But we're starting to see the XJO trade below that 10-day average. Just be a bit cautious on these recovery in the banks. We've seen sort of 20 to 30% rebound in them, and we're now sort of running into what used to be sort of support now coming into old resistance. So I'll keep an eye on that and again update you on the blog. CSL we've taken profit on. That has been one of the best performing stocks in the model portfolio, but it is under sell conditions now, so again our preference Fisher Paykel and Sonic Healthcare over CSL. ANZ, similar pattern to NAB, just be cautious of how the XJO behaves below the 10-day average, likewise with CBA. ALS up against a resistance at around 10.50. We expect that to remain sort of weak and trade below the 10-day average. Star Entertainment and Crown, I think these are names you want to think about on the short side. We struggle to see short-term earnings recoveries there. Not doing anything in Tabcorp. Preference is Star and Crown on the short side. South 32, that recovery that I've been talking about has mostly played out for the moment, given sort of what looks to be a softer backdrop in the US equity market and increased trade tensions with China. The domestic banks, you don't want to be doing anything there at the moment. Qantas, avoid that. Aurora Group, preference Amcor over Aurora. Centre Group, shopping centres in general, still tough environment, so it's hard to really get a read through on what the earnings recovery rate looks like, whether it's for GPT or Centre Group. Magellan up against resistance around $65. Downer EDI, preference has been CIMIC, which has worked out really well for us. We're buyers of CIMIC at $20, it's now pushing $25, so the whole call of being long CIMIC over Down has been right. The regional banks with Bank of Queensland, avoiding that. Crown, we're on the short side of that, and Star. Insurance Australia is now under sell signals there at around 550. High quality business, Insurance Australia, so we're happy to revisit it if we start to see evidence that a new uptrend's emerging, but we're just mindful that we've had that sell signal there at around 550, and we've got the trading activity below the 10-day average. Illumina no longer doing anything there. Incitec, this was one of the counter trend trades that we'd spoken about. So we looked at Origin, we looked at Telstra, we'd looked at Woodside Petroleum. Incitec pivot we've had a rally here from around $2 to $2.30. We've taken profit on that at the moment, and we're no longer holding that. Likewise with Orica, we've cut our exposure there. Treasury Wines cautious. Interesting the timing of the algorithm sell signal there at around that $11, which is obviously tied in with the increased trade issues that are developed with China. Just to conclude tonight, just have a quick look at a couple of ETFs that we've been commenting on the blog. So GDX, gold, tough to sort of pick the exact support level or buying opportunity here, but if we just zoom in and take a closer look at this, it still remains below the 10-day average. Stochastic slightly starting to turn higher. The original support level for GDX is back there at around $45. Maybe we could get down to a slightly lower level of around 42, but watch this for a break back above that 10-day average, and I'll draw your attention to it on the blog. One of our preferred global exposures has been US biotech, and we've seen this rally now from 55 up to $67 in that Cure ETF. And finally the WDIV, which was the with a Spider Global Dividend Fund. This has had a reasonable rally as well, from $14 up to $16. So thank you for listening in this evening, and if you would like to discuss with me more detail about our broking account service or set up your subscription to the Investor Signals member area, please don't hesitate to give me a call.